So those are the headlines, and let's now put the spotlight on microdramas. Yes, microdramas, ladies and gentlemen, they're all the rage in China and now in India as well. These are binge-worthy dramas of about 1 to 2 minutes, and they usually end up with a cliffhanger just to keep the viewers on the edge of their seats. So you have companies like Flick TV, YOLO, Kuku FM, Chai Shots, and Reel Saga. These are some of the startups, and then there are digital majors as well, including Amazon, ShareChat, and others that are tapping fast into this growing industry. And of course, VCs are following suit, and they're seeing potential in this segment as well. A look at how much funding they're getting. Well, Bengaluru-based Flick TV has just raised $23 million in seed funding from Stellaris. Reel Saga has also raised about $2.1 million. And then there are many others, and a flash of that you can see on your television screens. But the big question that we are asking on the show, is this appetite for the sector sustainable? Well, to discuss that and more, I'm now joined on the broadcast with Saloni Sehgal. She's a general partner at Lumicai, and of course, Manohar Singh Charan, the CFO and co-founder of ShareChat. Let me come to you first, Manohar. Help us understand, what are these micro dramas, and why would somebody want to watch a series just for about 60 seconds or a minute?
Mentioned in China for a while now. It's essentially, as the consumer attention span shortens, people want to be entertained and entertained fast. So microdrama is essentially short video meets TV dramas. So just like your usual entertainment moved to shorter format, similarly, entertainment through drama has also moved to shorter format. People, during their day, when people find some time, they want to get entertained, and therefore this short, like drama stories told in a short format, are picking up very, very well with consumers.
Yes, and that's essentially what we're seeing. And let me come to you, Saloni. So what factors are making microdramas an attractive investment opportunity? Firstly, it was in China and now in India. Since you're an investor and you must have also studied the market, help us understand some trends that you picked up in China and, of course, the growth potential that you're seeing in the India market.
Sure. I think it is a compelling format innovation, right? And we've been tracking this market for now over a year and a half, especially when we saw it emerge in China. The business model reality, though, varies very sharply between China and India, right? In China, the model is working because there's a very tightly integrated infrastructure. There are large distribution platforms with algorithmic targeting. There's high-performing monetization systems and an audience which is trained to pay for content. There's also platforms are spending very aggressively on performance marketing. They acquire users very efficiently and they recover those costs, right? But despite that, 90% of platforms in China are actually running unprofitably or with very slim margins. So now in India, for us as an investor, the format we believe is still in its infancy. And as Manohar suggested, right, audience appetite exists, but monetization is still yet to be played out here. And for microdramas, for it to become investable here, we need to see a couple of things, right? We need to see scale distribution platforms which have very deep reach and personalization, high performance marketing engines which will drive user acquisition, and then a commensurate math needs to take place between that kind of performance acquisition as well as user spend. So most platforms today are over-indexing, I believe, on content supply and under-indexing on the monetization. And that equation will need to balance itself out. It's still early days. I think it's an exciting format, but I think the monetization is yet to be proven out at the moment to see how and what kind of margins this business can run on.
Absolutely, and that will be very interesting to watch out for, given the fact that, first it was news and, of course, other entertainment videos that were on Instagram in short formats. And now you have micro dramas. Dramas essentially are meant to be lengthy versions, but that's also getting consolidated and shortened as well. Manohar, let me come to you on that point that Saloni made very clearly here, and that's essentially about monetization and revenue models. So what monetization revenue models are you planning around micro dramas on ShareChat? Give us some understanding of, what the audience behavior has been, and do you anticipate a time perhaps in the near future where the audiences are going to be paying, or will it likely be more focused around advertising via this medium?
Yeah, those are Saloni made some really, really valid points. What we are seeing today is consumers are starting to like this content format. They are willing to spend time consuming this content. The question of monetization definitely remains. So, the investor interest and overall the attention that we're seeing in the market is is as of now driven almost completely by the fact that consumers are coming and spending the time. People are taking a bet that monetization models will eventually figure out. That is how early stage investments are evaluating this space. When it comes to unit economics and how it will work over time, the point that Saloni made is very, very valid. That you will have to look at the cost of producing the content, add to that the cost of acquiring consumers, and then seeing how much value are consumers willing to pay on a, let's say, per episode or on a monthly or a quarterly basis. So us as ShareChat and Moj, we have the distinct advantage of already having a very large user base between our two existing products. And we can and we do intend to use those platforms to drive adoption of content. As of today, on Moj, there are about 15 million consumers on a monthly basis consuming short drama. And on a daily basis, we are seeing 100 million plus episodes being played. So adoption is going on very, very well. Monetization models
100 million plus episodes. So when you talk about that adoption, yes, please go ahead.
No, so I was saying, so adoption-wise, we are seeing very, very encouraging signs, and this is a very good starting point. Having said that, the question that remains to be answered is, are you going to take a subscription or a paywall-driven monetization approach, or are you going to take a free-to-view ad-supported monetization approach? And both approaches have their pros and cons. If you take a paywall or a subscription or a pay-per-episode kind of an approach, you will start to make money quickly. The amount of money that a user pays will compound fairly quickly in the beginning. But over time, when you look at, when you target high ARPU users, the total number of users that you can eventually target at steady state will have a ceiling. Let's look at the subscription products that exist in the Indian market today. I can't think of even a single player that has more than, say, 100 million subscribers or a monthly paying subscribers. So, eventually that is going to be a ceiling. At some point, you will have a ceiling on how many subscribers are there and how much money are they willing to pay. You will ramp up faster. Whereas on the ad side, the TAM is very, very large. You can potentially target 750 million users on a free to watch content. But then you have to figure out, can you make enough money to pay for cost of acquiring those users and the cost of producing content?
Absolutely. Right. Saloni, I'm going to come to you in just a bit, but I think Manohar has made an important point that, of course, monetization becomes all the more critical, and you have to be able to see till what extent will users would want to pay for these micro dramas, given the fact that it is a content-led economy and everybody is a creator of sorts. So, Manohar, what are the timelines that you have given to yourself and, of course, to your company in terms of the revenues that you're looking at and monetization that you're looking to achieve from these micro dramas?
So we are, as I mentioned, we are using both approaches. We are testing both. We've launched a subscription-only app called Quick TV. So Quick TV is behind the paywall. Consumers have to pay for subscription to consume content. Whereas on Moj, we are already allowing consumers to consume content for free. We've not started monetizing that attention through ads. So on ad monetization, we are giving ourselves a couple of months of time before we start taking this surface to advertisers to place their ads on. On subscription, we've started monetizing right away. We are giving ourselves about 6 to 9 months to start seeing significant traction on both sides. Ads will ramp up relatively slowly. The advertising monetization will show a lot lot of traction on consumption.
Right.
And advertising spends will follow over time. Subscription will start generating revenue from today onwards, but the cost of acquiring consumers to begin with on subscription surface is significant to begin with. On the ad supported side, because we have a large platform, our cost of acquiring users is zero.
Right, and which brings me back to Saloni's point when she mentioned that, it'll be interesting to see what are the kind of margins that are present in this business. So Saloni, when you think of the micro drama format, in your view, given the fact that you're a VC, how do you think it'll evolve, and will it end up merging with other media formats, storytelling methods, and that you think is going to be the evolution of this format? And hence, what is the growth potential that you're seeing?
The format is undoubtedly going to evolve, but I think ultimately survival will depend on building real business infrastructure, and it's just not about creative innovation, right? Yes, we'll see convergence. We'll see a lot of AI-generated narratives. We'll see probably integrations with virtual influencers. We'll see a lot of that. But format evolution has to be underpinned by strong, solid economics. It needs to be a balance between production cost, between user acquisition spend, and most importantly, predictable monetization, right? And right now, when I say that, is that most Indian players are underestimating the performance marketing required to scale. It's not enough to have good content. A lot of content platforms right now are relying on licensed content, for example, which then essentially reduces differentiation and competitive advantage. You need deep pockets for user acquisition. You need a clear path to recoup those spends via user payments or commerce, right? If the balance is off, even viral content or even tentpole IP, which is sometimes given as a reason for why some of these IPs have broken out in China, where one IP has essentially grossed maybe for $10-15 million in a matter of few weeks. But even that is sometimes not enough because it is a financial sinkhole, right? Many of these platforms actually spend nearly 80% of their revenue in user acquisition. But China has vertically integrated platforms like a Kuaishou that control distribution. They own their IP, they run the ads, they collect user payments, and then they optimize for the full funnel. Now, as Manohar said, that with ShareChat, Merge, etc., larger platforms, we have a portfolio company called Elo, right? Larger platforms like that will tend to be able to distribute faster, but eventually it's about business model discipline, right? Without that, the format then risks being a creative fad. And that is, as an investor, that is something that's a balance that we would like to see struck, especially when we're evaluating businesses at the early stage.
Right. Manohar, one final question to you in terms of scaling up. What are some of the big challenges that you're foreseeing with respect to scaling up this format here in India?
So I think Saloni has outlined those challenges in our previous conversation. The content supply is not a challenge. And with all the AI tools coming up, with all the automation technologies, even the cost of production start to come down a little bit. But, as it is the case in all content media businesses in India, finally, it boils down to unit economics. Can you make the unit economics work at scale and sustainably? So is the revenue that you're generating either by subscription or ads, is the revenue enough to pay for cost of production of the content? And at the same time, are you able to generate enough margin to pay for cost of acquiring consumers and leave some margin for yourself on a sustainable basis? When you are in a upward trajectory, you can potentially see the top line growing by just simply dumping money into user acquisition. But if your cost of acquiring a user is 90% of the revenue that you make from that user, you don't have a business model to begin with. It will very soon fizzle out because you'll continue to run on a treadmill, and someday when funding stops, you don't have a business.
Absolutely. Very well made points over there, Manohar. And of course, this essentially really boils down to the fact that, margins have to be there. And of course, the revenue potential has to be explored. And of course, creative development is only going to happen. Thank you very much, Saloni and Manohar, for joining us here and talking about this new trend of micro dramas. We'll see how this format evolves, but not just that, but most importantly, whether these formats are able to monetize enough to be able to sustain themselves over the next couple of years. Well, with that, ladies and gentlemen, it's time now for us to slip into a very short break, but lots more coming up on the other side. You don't want to miss that.